The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 3rd, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we've got a sea of red out there. You've got Dow down 1,596 points, about 3 7/10%. S&P 251, NASDAQ 100, 1,000 points, 135 for the Russell, 1,143 points for the transports, 356 for the semis. Composite down 1,000. Gold's off $18. Silver's down $2.14. Electric crude off $5.60. Natural gas is up 7 cents. 30-year Treasury is up 2 points and 3 ticks. She's printing out 120.03. If we take a look at leaders in the clubhouse to the upside, led by Molina Healthcare, up $21, followed by O'Reilly Automotive, $20.85. McKesson Corp, about $20. United Health, $14. To the downside, Booking Holdings off 286 points. That's a 6% move. Restoration Hardware, 42% move. 105 points. Holy shnikes there. Monolithic Power Systems, $76 or 13%. Parker Hannifin, $68, 11%. Out there. So we got movers and we've got shakers. Now I've got my black background system up. We have to on a day like today. And so my system's going to be operating slower. But, you know, there are certain things I need to be able to share with you. I'm the type of person that when I say something, I back it up with a chart or a pattern. And here's the one thing I'm going to share with you with regard to when we take a look at chart patterns today and so forth. There's not one chart application I know of anywhere where I can hover over a candle session. Let's just say, for example, here, the trading session of February 14th, we're looking at the GDX out there. There's nothing I can hover over to tell me what geopolitical events, if anything, took place then that day. So years from now, we're not going to remember, this day specifically. Instead, those people that are technologists, that are pattern recognition traders, we may see different patterns out there between ourselves. That's what I'm going to be sharing with you. As I said yesterday, I think all the stuff that you hear on the boob tube out there is a sideshow. Okay, the real show is what are the technical patterns showing us. So that's what I'm going to spend my time doing with you today. Look, all patterns can fail too. But we take the information that we have, and right now we're going to take the information that we've got on April the 3rd at 11:10 a.m. So let's begin. What's the first thing that we need to know about? We talk about the VIX index. It has many different very cool utilizations for us. Most people just simply read it and they use it as they call it whether there's fear or not fear. I've never been able to figure that one out there. But here's what I can figure out. Right now, we're looking at up on our screen. We're looking at the most current futures contract, and that is the April contract. It's trading out at $25.10. All other forward future contracts are less than that. That says that the event that is going on right now is a very short-term event. Now, I don't know if that's 24 hours, 36, 72. What it's not is weeks and months. Now, this whole scenario, this contango scenario can change, but right now that's not the scenario that we have out there. If you look at some people have noticed my bottom right-hand chart. I really haven't changed that out there. And they look at the very bottom panel, and they see the VIX, the spot VIX, divided by the 3-month VIX index out there. Very cool tool. Didn't used to be available years ago. Years ago, had to do with this whole VIX thing by hand with regard to take a look at the current contract versus going as far out as we possibly could out there. So if you take a look at that, you'll see that when we get these spikes up here, if you look at the very bottom panel, they're associated with what? They're associated with bottoms out there. That's, you want to talk about the fear and greed and you want to be able to use that to your advantage? Well, let's just say this here is unsubstantiated fear. If it were, when I say unsubstantiated, what I'm really referring to is the mere fact that we've gotten into this contango. I mean, really, we're not even close to the May price point out there for the spot VIX. Well, look, we don't have to just stop there. I can take you over to this chart here because we can take a look at this and look at the ratio of the VIX versus its 1-year counterpart. That's the very left-hand panel chart. The 3-month, that's the one that's in the center that we looked at, and the 6-month. All of those are in contango out there. When do we get a viable bottom? At least one where we get a decent bounce. It's either a bounce or a bottom. But these are viable bottoms out there because this has been stretched so far out there, and it is so, at least at this stage, at 11:12 in the morning, I can tell you that we're more likely closer to a bottom than we are for the market to crater and crash out. So what we're waiting for here now is for things to realign themselves. We're waiting for that spot VIX index to get back below the forward future contracts. And that will see this ratio get below the 1 level. When that happens, now I don't know how long that's going to take for that to occur, but when that happens, that's going to be the next bottom signal that forms inside the marketplace. So then that's really important to take a look at. What else do we want to look at out here? If we want to see how things have been trading since the election day, the day after the election, I should say, I think I can pull up this set of charts out here. Yeah, we're closer to a bottom than the top. If there's one way to look at it. But here, these orange lines, these show you what, for these instruments, where price was trading the day after the not election eve, but election the day following the election out there. And the only instruments right now that are trading above that election day is gold. 27.58.80 is the level to be watching there. In the case of silver, we're now just testing that breakout level at 32.85. You can see how light sweet crude, man, its run up here ran really right up into, this is yesterday, ran right up into resistance up at that 72.63 level. When we're looking at the light sweet crude futures chart, it was saying we were going to rally further. What I neglected to do, because I didn't have my black background system up, was to take a look at where we were trading in relationship to that date, because it's an important level, I believe, to be watching. If we take a look at the 30-year Treasury, we're trading above it right now. The 30-year Treasury, as you can see here, visually is setting up an A to B equals CD pattern to the upside for its daily time frame. Natural gas is the only instrument that has traded above the election day low out there and has maintained that. So I really think that what's that telling us about natural gas? I'd have to say at this stage here, natural gas is immune to Donald Trump's decisions out there. That it's going to, or the decisions that he's making, natural gas is going to continue to rally. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So the first question is, when is that bottom going to take place out there? Well, I think the first piece of information that we're going to get is going to come overnight. And so those folks that do trade overnight, what you should be paying attention to is the DAX. The DAX went ahead and completed a TD9 count bottom pattern today. You're looking at the daily time frame chart. Let me just expand it so we're all looking at the exact same thing. Again, no one has ever built a software tool that I know of where I can go to a specific date and can check on it and see what was associated with that. You know, there's nothing that is a TD9 count top out here that formed back on September 2nd, 2024. I can't click on that and find out what geopolitical event, if anything, happened that also assisted with the price moving lower. All I am is a pattern recognition trader out there. The DAX formed a nice Rhodes momentum indicator top, had two of them up there. It doesn't mean that because it had 2 topping patterns that was stronger than one. But what price did is it pulled all the way back to its breakout level, forming a TD9 count bottom pattern. Now, if price closes below today's low, this would be tomorrow. So the DAX is still trading. I think it closes at 11:30, if I'm not mistaken, because of the daylight savings time. It's 11:30 or 12:30. The low right now is 21,670.96. If price were to close below that tomorrow, then we would know that this pattern failed. It was negated, and we have a strong downward momentum move. Where would price likely take us to? So that's another good question out there. If we look at the weekly time frame chart, I would say it would be its breakout level. Ignore the profile levels if you would. I didn't want to change charts and screens, and I think I can get this stuff to populate a little bit quicker here. So there are 2 levels of additional support then if the daily TD9 count bottom fails. And those levels would be either 21,052, that happens to be the monthly oscillator and change line. Look how strong the DAX is. It is still above its oscillator and change line for a monthly time frame. I don't think there is a U.S. indice out there that is doing the same. But we'd have to go back and take a look at their monthly charts. So the DAX is going to be one of the first places that you're going to be paying attention to. Another area, and GTE wrote in about this, is the Hang Seng. So let's go take a look at the Hang Seng. It's important to really take a look at markets around the globe. At least I believe that it is. We're not just just not one world market. out here. So if we take a look at the Hang Seng, the index out here, that also formed a bottom pattern. I can't recall which one that it formed, so we're going to get the daily, weekly, monthly charts up on our screen out here. So you're going to be able to take a look at the Hang. Again, my data, I don't have the right data feed here, but I'm hoping it's going to pick this up. Come on. Yeah, it did. Okay, so on the daily time frame, you'll see on the Hang Seng, today was the bar following bar number 9 of a TD9 count, and that went ahead and actually triggered a valid TD9 count bottom. So what you're going to be watching for the Hang Seng over now, what should take place here is price should rally up towards the 23,862 level. Again, this pattern can fail, and a failure would be a close below 22,638.21 tomorrow. If price closes below that level, 22,638.21 tomorrow, that tells us we have a strong downward momentum move. Its next price target would be pretty simple. It's the same price target on the daily as it is on the weekly, and that's at 19,764.67. So two of the international indices have got TD9 count bottom patterns out there. Those are the ones overnight that you'll pay attention to in order to try to get a feel for what the markets are communicating to you and I. If we take a look at it, go from here, we take a look at our daily, let's look at the daily cash instruments out here. With regard to the daily cash instruments, what I actually love about the mere fact of being able to try to identify a bottom is how many Rhodes momentum indicator signals that we have triggered right now. The Dow just slightly went below its TD9 count bottom. That's from the trading sessions back here on March the 13th. That low is at 46.61. We're at 47.60. So far, you've got a test and rejection of that TD9 count pattern, but you also have a Rhodes momentum indicator signal. And those are really beautiful for being able to identify real nice, strong, viable bottoms typically out here. And I mean, they're strong, viable bottoms. So we've got this for all of our ticker symbols out here, the exception being the semis. Semis do not have that pattern, so we're going to have to study that a bit further. We're going to take a look at the semis next via the SOXX. But I just want you to see those Rhodes momentum indicator signals that have been triggered. Bullish reversal candles will confirm a bottom pattern there. Let's move from there and let's go over to that first request if we can. Well, let's look at the daily equity future contracts, and then we'll go over to that. Now, here on the daily basis, the NQ, what the heck happened here? Hold on a second. Because I've been changing data feeds, things have been, there we go. Yeah, so I got to be careful because of the change in data feed. Sometimes I need to restore the historical data. So here with regard to the NQ, so we're watching the NQ most certainly at day's end. Now the NQ has a Rhodes momentum indicator bottom, formed that bullish hammer candle back on March 31st. That low is the critical low. What is that low? 18,976.75. That's what you want to go ahead and write on your pad of paper. If we close below that, that pattern gets negated. It has also triggered a wave number 7 pattern. That is letter G. That's courtesy of Basil Chapman. It's a very small portion of the Chapman wave out there, so that pattern is also present. That says you need a higher low to confirm that bottom. In the case of, I was really never comfortable with the buy the D point patterns inside the ES Mini. Or the NQ. The NQ, I didn't have to worry about that. The YM, we didn't have to worry about that because of its TD9 count bottom. And the Russell was really clear with regard to its buy the D point bottom. So now that now I don't have to worry about that. Why? Because you've got a triggered Rhodes momentum indicator signal, and it's going to be the bullish reversal candle for the daily time frame that would confirm that bottom pattern out there. In the case of the Dow equity future contract, the level that it's testing, again, is that TD9 count. I think I gave that to you, but if not, let me just make sure I do. That level to be watching is 41.040. If that price holds at the end of the day, we're at 41.037. That bottom remains intact out there, and we would just be waiting for the other, possibly the NQ closes back above its Rhodes momentum indicator bottom, and we'd just be waiting in that instance for the ES and the Russell 2000. Now, let's go take a look at some of our requests that have come in. The first one from Duncan Steve, who wants to take a look at the SOX. Now, in the case of the SOX out here, what I'm looking at here, what sticks out to me, Dunk, is the weekly time frame chart. And the weekly time frame chart for the SOX is going to go ahead and complete a TD9 count bottom pattern tomorrow on Friday. There's an A to B equals CD pattern that is present. If we draw that in here on a weekly basis, and if it's here on the weekly basis, it's going to be here on the daily basis as well. We move that over. We're not quite anywhere near the one-to-one price projection level. for the stocks for its, well, I say we're not near it. We're at 173, and that price projection, the 1-to-1 gets us to 163. So another 10 points to the downside. But what's going to be helpful here is that you're completing this pattern this week on a monthly time frame. We are in bar number 8. As you and I know, we can form a TD9 count bottom on bars 8, 9, or the bar following bar number 9. In the case here for bottom, one of those has got to be the low of the pattern out there. So now the monthly time frame says you could get a bottom pattern between this month and the next 2 months. We just started this month out there. So that means we've really got to start relying on the weekly and the daily time frame. For the daily time frame, there's A to B equals CD patterns all over the place. A shorter term one. So we looked at that larger one on the weekly time frame, but we can find shorter A to B equals CD patterns out here. And so what we'd be looking for there, Steve-O, would be a bullish reversal candle inside the SOX. Now, the SOX just had a 2-day rally out there, so we may be getting ready for more than a 2-day decline inside that. But come Monday, we may have a bottom inside the semiconductor index, at least via the SOXX ETF. Steve Rhodes with TFNN. Hope you're right.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at the 30-year Treasury to start off here. This is for Mr. Bill, who wants to really take a look at the TLT out there, and we will do that. I just want to make sure, because the signals, the patterns are oftentimes, not always, but oftentimes difference between the two. So in the case of the 30-year Treasury, Mr. Bill, you can see you've got a nice TD9 count top that formed out here. Wave number 7 as well, back on March the 4th. And that high is really the critical high, 119.18. We're at 119.25 right now. If we close the day above 119.18, number one, that's going to trigger an A to B equals CD pattern to the upside. We can draw that in or give you an approximation for where that would take us to. I'm just simply now going to go ahead and move this over to the low of that pattern. Well, I was going to try to do that. Let's see if I can do it like this. There we go. So if we get a negated daily TD9 count top, that today requires a close above 119.18. That would then trigger an A to B equals CD pattern to the upside. And the initial price projection would be in the 124 area out there. The weekly time frame chart, and I've got the June contract up on my screen out here. I'm uncertain. I got this profile that's down there that we don't ignore that. But right now we are trading above the top of its weekly profile, Mr. Bill. So for the June contract, that number is at the 118.26 level. So watch for a weekly close above that. If you do that, then you've got two signals that the 30-year Treasury wants to continue to move higher. Now let's go look at the TLT patterns out here. The TLT have a TD9 count pattern that would be taken out, and the answer is no. So we take a look at the TLT. Not even close to what we're looking at on the 30-year Treasury out there. It does have a top. It was a wave number 7 top out here. Of course, that gets taken out just simply by one tick above that level out there. But what the TLT is telling us is that it needs to close above the high from March the 4th. That high is 92.79. Volume there was 56 million shares. Yesterday, we moved into it, rejected it with 43 million shares. Today we're inside it in 2 hours of trading, 23 million shares. So you've got you certainly have the volume as you move into that swing point. And therefore, if price was able to close above 92.79, that's what would trigger an A to B equals CD pattern to the upside for the TLT. So you don't have the same patterns inside the TLT that you do for the 30-year out there. Take that for what it's worth. And look, the 30-year Treasury is not the complete underlying instrument out there. We just simply, it's a 20 plus, and so we like to take a look at the 30-year to get a decent feel for what is currently going on. So that's what I see, Mr. Bill. When we take a look at that. You were a little shy out there this morning, so let's go take a look at SHY and see what this is doing. Now, I have no idea what SHY is. I don't need to know what anything is. We just call the patterns are the patterns out here. So in the case of SHY, which 2 days ago formed a Rhodes Momentum Indicator top, I did that when price gapped down on April Fool's Day. That was yesterday. No, that was 2 days ago. That top is now being tested out there, and a close above 82.77. Well, it'll negate that Rhodes Momentum Indicator topping pattern. It suggests that we continue to move higher out there. The volume on that day was 4.6 million shares. So far today, Mr. Bill, we're up with 1.3 million shares. So we're coming in with a little bit lighter volume, or similar type volume. We're not crushing it is what I basically want to say out there from a volume standpoint up to the upside. The weekly time frame, though, is suggesting that price is going to move higher. And the reason is because its TD9 count pattern was negated last week. The high of the pattern came in the bar following bar number 9. That was 2 weeks ago. Last week, that pattern gets negated, and that tells us about a strong upward momentum move for SHY. Now, what would be its target? At this stage here, I'd say its target would be $83.06. The reason that I give $83.06 is because that is the top of its monthly profile. So that's what I see when I take a look at SHY. But in order to get to $83.06, it has to negate, it has to take out that high. When I say that high, it needs to close above the March 31st high. That's at 82.77. So that's what I see when I take a look at SHY out there. Mr. Bill, I hope that helps you out and gave the information that you were looking for. If not, please let me know. We'll get that to you. Duncan wants to take a look at Amazon out here. So let's get Amazon up on our screen, see what it is doing. Amazon taking out its wave number 7 bottom pattern out there that formed about 3 days ago. It still has that Rhodes Momentum Indicator signal here that has been triggered, and that needs a bullish reversal candle. So that's what you're looking for on the daily time frame to take a long position inside of Amazon. The weekly time frame is in bar number 7 of its TD9 count. It is trading below its TD9 count breakout level at 185.23. That is not good. However, maybe what that says to you and I is that price is going to pull back to test the swing point, the weekly swing point that is, from August 9th. That swing point ranges from 151.61 up to 168.55. It turns out that at 169.79, that's the bottom of its monthly profile out there. So that would be a level of support. Now that candle's got 272 million shares. If price tests and rejects that level, that would be your buy signal there. So on the as far as Amazon, as far as where's it likely headed to, we've got to go still right now with the 169.79 level because we're trading below all levels of support out there. But watch for a bullish reversal candle. Not necessarily today, but tomorrow, Monday, Tuesday, something along those lines out there. By the way, I know I've shared this with you before. That was also the last request I think that I have, although I'll check my phone here momentarily. If we take a look at, seasonally speaking, this is the S&P 500. This is its 97-year post-election seasonal pattern. And the post-election seasonal pattern says that we should get a bottom by April 7th. I believe April 7th is Monday out there. We put that together with regard to the spot VIX index contango situation, with regard to a bottom pattern in the DAX and the Hang Seng, with regard to possibly the NASDAQ holding onto its bottom pattern at the end of the day. The same thing with the Dow Equity Future contract. So that's the seasonal pattern that I believe is in play, but we're going to find out soon enough. Now, I did mention that I don't really have any other requests here, but let's go take a look at what's going on intraday. We've got to at least do that, and we got to take a look at gold. I'm surprised we haven't had any requests about gold, but that's okay. Stevie will give myself my own request. So let's take a look at whatever it is that pops up on our screen here, the ES Mini. So in the case of the ES Mini, we're looking at its intraday chart. So the 5-hour time frame chart still has a Rhodes Momentum Indicator bottom pattern. That formed last night at 2,300 hours at 11 p.m. So not until that low gets broken, this is the ES Mini, that low, by the way, is down at 54.81. Not until that low gets broken will it suggest that price is really going to move much lower out there. If we look at the 4-hour time frame chart, it's trying to. Now this candle session on the 4-hour basis closes at 2 p.m. It still has a Rhodes Momentum Indicator signal. There's no bullish reversal candle just yet, but there could be one that forms by 2 p.m. In the case of the 120-minute chart, again, it's got that nice Rhodes Momentum Indicator bottom. This is going to a candle's going to confirm at 12 noon. So another 1 minutes from now, and if we do have a bull right now, it's a bullish hammer candle. If that's what we have at 12 noon, you've got your Rhodes Momentum Indicator bottom for the 2-hour time frame chart. You have a TD9 count bottom on the 60-minute chart right now. That has completed. Steve Rhodes with TFNN, the 30 minutes of Rhodes Momentum Indicator bottom. It's rally time, folks. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Boy, I love doing this stuff live, especially days like today out there, just to try to gain some type of clarity what the markets are communicating to us. And before we went to that break, I said it's rally time. If we take a look at the intraday charts out here for the ES Mini, you look at the 10-minute time frame chart, you can see that nice Rhodes momentum indicator bottom pattern. Price right now is taking on a key level of resistance. It's a sell zone. It's the top of the sell zone at 55.1450. That's the first number for everybody to be watching. Now, it turns out that the 60-minute time frame, which has a TD9 count, and it looks like it will go ahead and form a Rhodes momentum indicator bottom, is dealing with resistance as well. That's at 55.02. So call 55.03. That's its oscillator and change line. So if we get a close above the 55, let's call it 55.0. Second here. Let's call it 55.04. Maybe 55.05. That'll give us up. That'll give us plenty. Nope. 55. Yeah. 55.06. 55.07. Stevie, give me the number, would you? We close about 55.07. That's a signal that the rally should extend itself. Now, extend itself to where? Where's the next level of resistance? The next level of resistance, if it extends itself beyond this, is 55.3175. That would be the next upside price target that I see inside the ES Mini. Let's go see if what's going on inside the NQ out here. What kind of signals is it generating? Is it generating the same signals that the ES Mini is? And it may not be. So let's go check in on it and see what kind of signals that we have there. Again, the most important signal for the NQ is going to be the end of day signal. Does price close above its bullish hammer candle that formed back on March 31st? That formed that Rhodes momentum indicator bottom. That low, 18,976.75. We look at its intraday signals out here. The 4-hour time frame chart. 2 o'clock needs a bullish reversal candle to confirm a Rhodes momentum indicator bottom pattern. In the case of the 2-hour time frame chart that's going to complete here in about 16 minutes, a bullish reversal candle would confirm a Rhodes momentum indicator signal for that at 12 noon. Looks like we're going to get a confirmed 60-minute Rhodes momentum indicator bottom. The same on the 30s already can confirm that. So where's price headed to? Where's the resistance level? So for the NQ, the key resistance level right now that it's dealing with is its 60-minute oscillator and change line, 18,922. Why don't you make it 18,923 or 4 out there? If price closes above that, increase the odds of a further rally, but we have to understand where other profile levels are. So other profile levels, other levels of resistance, you've got 18,974, that's coming from the 10-minute time frame chart. 19,038, that's coming from the 15-minute time frame chart. 18,976 to 19,074, that's coming from the 30-minute time frame chart. So those are the levels, those are the battles. This is the football game that's going on right now between the offense and the defense, and we're sitting right here, right now, with that next play about to begin. So that's what's going on inside of the NQ. There was a request inside the Tigers Den from Mr. Z to take a look at Light Sweet Crude. I put that over on daily, weekly, and monthly time frame charts out here. So Light Sweet Crude today formed a TD9 count top. We talked about that yesterday, and price in one day has pulled all the way back to where it had broken out from. So 66.09 is the key level of support here, that if closed below, says that we head lower. Now, that doesn't mean that it's curtains and it's over and that Light Sweet Crude is going to get much, much cheaper out there. In order for that to happen, Light Sweet Crude has to close below the low of March 5th. That was its TD9 count bottom, and that is at 64.85. A close below that says that we head lower. At 65.13, you've got monthly profile support. The weekly time frame isn't really much help to us, John. Its level of support, though, which has been tested several times, is 64.97. So I would say if 66.09 gives way, that means we close below it. We're likely headed to the 64.97 level, 64.97 to 65.13. If those areas get broken, well, then we know that it's really up to the swing point that formed that TD9 count bottom pattern, and that's at that low of 64.85. That would be that final level to be taking a look at. We had a request here from somebody inside the Tigers Den to take a look at BHP. So I did get a chance to update other charts, so we're simply going to do this on the fly. I may switch over to the screen where I've got a 30-minute time frame chart as well. It just depends on how many requests that we have that come in, and if I can remember to do that. But first, with regard to BHP, so it's daily time frame. What I don't see is any kind of a bottom pattern. I see A to B equals CD patterns out there. On a weekly time frame, I don't see any kind of a bottom pattern out here. I see an A to B, a larger A to B equals CD pattern to the downside. Let's actually draw that one in, get a feel for where we're trading in relation to that. What BHP did on a weekly basis formed a nice TD9 count top. Now we're in an A to B equals CD pattern to the downside. We're going to copy and paste this to give you at least an intermediate term view of where price is likely headed to. So the one-to-one price projection level, we're not that far from it. The one-to-one would get you down to the 44, 45 level. Let's just call it, ballpark 45 level. So you're waiting for prices likely going to head lower. We're trading below profile and oscillator and change line support for the daily and the weekly and the monthly. So no reason there for BHP not to continue to move lower. Monthly time frame is in bar number 7 of a TD9 count. I think what you're waiting for here is you're waiting for BHP to get down towards that weekly A to B equals CD pattern, may do an expansion. That means more than a one-to-one move. And then that bullish reversal candle could identify the bottom for you. Let me switch back to this other chart, my other main screen out here. Let's take a look at CCAP. CCAP. Let's get that up on our screen. I think this is also this is from Guppy inside the Tigers Den. Could you look at? So I think I gave you the long term output, even though I wasn't looking at the screen. I just glanced back to see what you were looking for. But I'm giving you the information that I can from these charts here. What's most important? I think that weekly A to B equals CD pattern was it. Now, with regard to CCAP, it already has a Rhodes Momentum Indicator bottom pattern for its daily time frame. That formed with a nice bullish hammer candle 4 days ago. That was on the 31st. So far, that low was tested. That was 1664. You got down today to 1680. 1680. Well, I guess the low was not tested. 1664. Nonetheless, it has a daily bottom pattern out here that remains in effect. What it needs to do, so when it formed that bullish hammer candle, price ran right up into the center of that bullish structured profile, the level where a counter trend move would come to an end out here. So volume on that bullish hammer candle was 169,000 shares. Today we pulled back with 56. in 2 hours of trading. That's about 140, 150,000 shares. So maybe a little bit of lighter volume as it moves into that swing, but you definitely have a daily bottom. I can't say the same thing for the weekly time frame chart. That is, unless this rallies today and tomorrow and gets back above $17.13 out there. It's TD9 count breakdown level. So the weekly chart is saying that counter trend rally that we had 3 days ago, that just may be it. Now, we won't know if that's the case or not unless price takes out and closes below the bullish hammer candle. So its key level of support to be watching, McGuppy, is going to be 1664. If you see it close below that, it won't be a surprise because the weekly's trading below its support levels. The monthly is doing the same thing. It's trading below profile support. So everything is being controlled by the daily time frame for you out there for CCAP. So I hope that helps you out. The financials. I got a request to take a look at the XLF. I'll get that up on my screen, and we'll take a look at the financials. And we come back from this break. And I'll get something up for gold and silver as well.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So we're taking a look at gold, which formed a new profile today, and price pulled back and tested that level at 3087.90. So that's a level you want to note on your pad of paper. That's brand new. As price was testing that level of support, the 30-minute, 15-minute, and 10-minute charts were each forming TD9 count bottom patterns. Now, the 15-minute rallied right up into the point where it formed a TD9 count top, is now pulling back and testing support. Its key level of support is 3126.80. The 30-minute time frame chart rallied right up into the level. It's a bit concerning. It's its TD9 count breakdown level, and it has turned back down. If we take out these TD9 counts, if we take out, quite frankly, 3087.90, I would prepare for gold to be making a pullback for a couple of weeks out there. The charts say caution. I know we saw a nice little pullback, we captured some of those early morning losses out there. But the chart patterns, the intraday chart patterns right now, are just saying that we may have just seen a little bit of a counter trend move out there. But the key level for gold is going to be that 3087.90 level, the bottom of that new profile. If we take a look at silver out here, silver is trading below its breakout area at 32.21. Watch that at day's end. A close below that suggests that we head lower. Head lower to where? I would say it would be the 3104 level. We are back inside. So the weekly TD9 count pattern for silver was tested and held, tested and rejected. That was from the October 25th of 2024 timeframe. Now we're back inside the profile. The next level of support that I see would be down at about the 3104 level. So that's what's going on with regard to silver. And was there anything else I was supposed to look at? I don't think so. I don't think so. Back to the, how about the currency market? Let me just throw currencies out here. So the euro is in wave number 7. So you've seen a huge move to the downside inside of the U.S. dollar, primarily caused by the euro. But look, we've had the U.S. dollar, Japanese yen get stronger, and the Great British pound get stronger. Watch the euro. The euro is in wave number 7. That's letter G. All that needs is a lower high to confirm that top out there. Folks, stay tuned for all the great programming. I'll be back with you tomorrow on Fabulous and Fantastic Friday. But in the meantime, have a terrific Thursday. Thanks for joining me. Be safe out there.